Very interesting perspective and reaction to the Fed last week, and I'll just cite RBC that says the Fed is not governed by its dual mandate, but rather a multi-variable mandate that extends well beyond the tenets of US employment and US inflation, talking about the global macro effects. You're looking directly at the US consumer and businesses. Do you think the Fed is also off its dual mandate path now?
Well, the Fed obviously is a pretty tough position right now because, after several months of announcing that they were going to tighten, they begin to realize that the global economy has its issues. Well, they've been saying that before, but I really don't see the global economy much improving. And then the US economy, there's also a lot of different views on how to think about it. And as you say, even though consumption is taking the economy forward, investment growth, productivity growth remains extraordinarily slow and keeps the US economy at about a 2% growth rate, which is much lower than most people would want to aim for.
How would you describe the US consumer? I mean, they're always one of the greatest boosters to US production, US output. How is the consumer faring now as we move through 2016?
Well, let's not forget the US consumer accounts for about 70% of GDP, but in the past couple of years it has accounted for more than 90% of GDP growth because everything else was slow or negative. Investment, as I mentioned, exports haven't been faring very well. And indeed, when you look at the consumer, they're actually fairly confident. It's taken them quite a long time to get out of this recession of 2008-09, but now they begin to see their household balance sheets improving, their incomes are beginning to gradually increase because of wage increases. So they're fairly confident. They have been affected in the past couple of months because of what they hear on the market and the uncertainties in financial markets, but ultimately they look at their own wallet and think it's not too bad, so let's move forward.
US economic story looks reasonably good, but this is all happening in a backdrop when the rest of the world really doesn't. It looks pretty poor. How do you think that's sustainable in the long run, that America can continue to perform quite well when the rest of the world is looking quite limp?
Well, when you look at it historically, the answer would be pretty much yes. I mean, they're not obviously isolated from the global economy, but the exports to GDP in the US is relatively slow. The domestic market is much, much more important. But, a lot of uncertainty in the global economy that will ultimately impact on business. And when it impacts on business, and it impacts on financial markets and on the consumer. So in the longer term, I would agree with you, it's not sustainable. But I think for the next couple of months and even the next year, I would think the consumer is continuing going to drive the economy.
And Bart, to what extent is the low oil price playing into this confidence of the U.S. consumer? Because we often talk about on the equity side the nervousness around low oil, but everyone's been waiting for the stimulus effect to actually kick in. Is that happening?
Well, last year the consumer did benefit from the significant drop in oil prices. It probably added about 0.3, 0.4% to GDP growth in 2015. And this year, now that the oil prices are low, the additional benefit from the consumer is limited. Of course, they can now spend the money on other things, but at the same time, they're still saving pretty well. But overall, I would think that the spending power of the consumer remains strong, which, by the way, will mean that it will give some upside pressure on inflation this year.